Mortgage rates remained over 6.6% all of last week. Housing inventory is finally declining, but is this the start of our yearly seasonal decline? Or is this just the result of two back-to-back hurricanes? The biggest news nobody is talking about, probably because they have no idea what it is that the mortgage rate spreads are continuing to improve. Last year, the spreads were about 0.61% worse than they are today, which means mortgage rates today, instead of being around 6.6, would be about 7.25% if the spreads had not improved, so it's a big deal. Also, the number of people applying for mortgages every week finally stopped climbing after 6 weeks of straight growth. This is obviously a result of those big mortgage rate jumps last week. We're covering all of this and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends, we're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Call, text, or shoot me an email. All that info is in the description below. Okay, today is October 15th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here and it'll take you to the latest weekly market update. Okay, first up, we usually start with market news, but there wasn't really any noteworthy news last week. Plus, my computer screen blew up yesterday. So since I wasn't able to put this weekly update out on Monday, now it's Tuesday. I'm running behind on everything. So instead, I'm going to feature a new community that I made a video about last week. And also, if you happen to live in Dallas and have a Mac product, I highly recommend the guy who fixed my computer. His Instagram handle is @ComputerFixDallas. I took him my MacBook at 8:30 in the morning, and by 2:30 he had installed a brand new screen and replaced my batteries because those things have been dead for like over a year. But I know from experience, if I had taken this to the Apple store, it would have taken me hours to get in, and then they would have told me they need to ship it off and I'll have it back in a month, if ever, or something crazy like that. Also, a friendly reminder to everyone, make sure and back up your computer today because you never know when it's going to blow up. For me, it had been over a year since my last backup. So this week, we're looking at a brand new community. And ideally, I would be able to feature a new community every week, but it's actually a ton of work, but I do hope to start featuring more communities here and there. But this week's featured community is Astor Park in McKinney, Texas. It has a low tax rate of just 1.9%, no PIT or mud tax, and it's zoned to the top-rated Prosper School District. And I know a lot of you have been hoping to buy a home in the Prosper School District, but obviously it's gotten too expensive. In fact, the median home price in Prosper right now is just under $900,000. Not to mention, a lot of those Prosper communities have a PIT or mud tax, and their tax rate ends up around like 2.4%, or sometimes even higher, making it even less affordable. But in this new community, with the current incentives they're offering, you'll be able to buy one of these smaller plans with a household income of just about $180,000, which is nothing compared to a $900,000 house with a 2.5% tax rate and no mortgage incentives. But specifically, I wanted to show you this home you're looking at right now. This is going to be plenty of home for most of you. It has 4 beds, 3 full baths, an office, game room, and is 2,454 square feet, and it has a base price of about $584,000. Once we add our 10% in design center upgrades, you're looking at about $642,000. And thanks to those big mortgage rate incentives I was just talking about from this builder, if you have a household income of only about $205,000, this beautiful home you're looking at is going to be in your budget, specifically in this community with these incentives. So if you've been looking to get those top-rated Prosper schools, this is going to be a very affordable way to do it. And of course, these incentives change all the time. If you call me 3 weeks from now and ask for this deal, it's probably not going to exist. Again, this community is called Astor Park. It just started phase 1. In fact, it just opened to the public a little over a month ago. And the reason it being in phase 1 is very important is because from the minute a community opens, those builders are trying to drive prices up from day 1. So by the time you get to the final phase, builders have usually driven the prices up significantly higher than what they were in phase 1, giving you a lot of built-in equity. And I think I forgot to mention it, but this is actually a gated community. I believe there's going to be 5 phases, and each phase is going to have its own gate. And gated communities are actually pretty rare here in Texas. So homes here start at just about $517,000. Now obviously that's the base price for a smaller single-story home. about 1,600 square feet on a 40-foot lot. Realistically, most of you are going to end up buying in the mid 600,000s for around 2,500 square feet, exactly like the house I just showed you a minute ago. Then on the high end, you've got Toll Brothers building on 60 and 70-foot lots, which you can build anywhere from 800K to just over $1 million, all the way up to 4,940 square feet. So there really are options for every budget in here. If you want to learn more about this specific community, make sure and watch this video next, where I give you a tour of all the model homes that were open. A few of them were not yet. Or if you think you're ready to start your home search now, or you want to get building now, just call me today. All my info is in the description below. Okay, moving on. Let's start with national housing inventory. This week, as you can barely see, we had our first decrease in a month, which was back here. We had a decrease for a week. And it was a very small decrease of just 1,880 less homes for sale in the country, which drops us to only 34% more inventory than we had last year, whereas we've been around having 37% more inventory for the last several weeks. So this gets us to 732,410 homes available for sale in the country. This same week last year, inventory was only at 546,450 homes, so still much better than we were last year. And as you can see on these two red lines, as 22 and 23, we had a similar slump at this time, and then we continued growing all the way to the end of October or early November. It'll be interesting to see if this repeats, but mortgage rates were climbing in both of these 2 years, whereas presumably they're supposed to be dropping this year through the end of the year, but worst case, they're at least probably not going to go any higher. So still is the opposite of what was happening these 2 years, which could cause it to start declining early, which means we very well could be seeing our seasonal decline right now. It's very hard to tell, obviously, because we did have those back-to-back hurricanes in Florida, which obviously has a big impact on the number of homes that are active, as well as new homes being listed there. So that's definitely going to be skewing the inventory numbers. We just don't know how much. We're going to have to wait a couple weeks to see, but also this very well could be the peak of seasonal inventory for the year. Then for reference, at the inventory bottom in 2022, we only had 240,000 homes for sale. That is crazy. And then the peak of last year, we had 570,000. This same week in 2015, we had about 1.179 million. So we have almost 200,000 more homes on the market than we did last year. But we would need another 400,000 to 500,000 from here to get back to a normal inventory. Now we're looking at new listings. This week, we had 62,876 new listings in the US. And this is extra good news that inventory went up this week, because we weren't sure. We saw these two big spikes. This one was when mortgage rates dropped. This one was when the Fed announced their rate cuts. So it seemed that these were going to be just temporary, just a quick flash in the pan. But actually, for the last 3 weeks, we still have been seeing more new homes being listed than either of the previous 2 years, which, as you can see, most of the year we were seeing way less homes being listed than we did in 2022. So now for 1, 2, 3, 4, 5, 6 weeks now, we have had more homes listing than either of the previous 2 years, and that is a good thing. Now looking at pending sales, as you can see, for a long time we were pretty close to 2023's numbers, and then right around here when rates started dropping, we really got far away from it. We are almost finally passing 2022's numbers, but we haven't yet. And in fact, we are only 1,072 homes short of breaking out of that 2022 line. That is going to be a big deal on our journey back to a normal market to finally cross that. But we're not there yet. We have 7.6% more single-family homes under contract than we did last year. That is a big gap. And overall, that is 350,455 homes pending. Then the last thing we cover nationally is the percentage of homes having a price decrease. Every year, it's normal for a third of homes to take a price cut before selling. Looking at this national chart, we see a tiny increase this week. I would say that's pretty much flat. We're up to 39.62% of homes had a price cut this week. Last year, we got as high as 39.2%, and we've been just kind of hovering right above that peak of last year. And then in 2022, we got all the way up to 43.2%. It does not look like we're going to get anywhere near that this year. And as you can see, based on the previous 2 years, we should continue climbing all of these weeks. In both cases, instead, we've just been pretty much sideways, totally flat. But just know it would be normal for this number to continue increasing, but obviously rates have dropped and that has impacted this, and we're now flat. Okay, moving on to mortgage rates. We started last week. Well, let's ignore the 15th because I'm not supposed to know that because this video was supposed to come out Monday. But last week we started at a 6.62 and we ended at a 6.64. We got as high as a 6.67. So I'm glad we came down to a 6.64. Then Monday, yesterday, we came down a tiny bit to a 6.62. This, of course, as we covered in last week's video, the labor reports came out. The labor market is still way too strong for more rate cuts to be coming. So the bond market said there's not another rate cut coming. We need to move rates back up. And that jumped us 0.3% up in a single day just because of a strong labor report. So for the foreseeable future, until somebody at the Fed says something different, or until a weak labor report comes out, you can expect rates to be somewhere around this 6.6 range. Then regarding mortgage purchase applications, this week was basically flat from last week. I mean, it was like a 0.1% negative or something, but the bigger news is we're still 8% higher year over year. So we have an 8% increase in the number of people applying for mortgages. That's a big increase from last year. So this means after 6 straight weeks of mortgage applications growing, those high rates finally put an end to that. This week we're pretty much flat. But you know, as I've been saying all year, and I still believe this, there's no reason to believe mortgage demand is going to grow significantly with rates anywhere near this high. The real demand is going to come in once rates get below and stay below 6% for a sustained period of time. The evidence I have for that, new construction has been offering 3.99 to 5.5% rates, and there has been plenty of demand there for home buyers, a lot more new construction sales happening compared to the resale market, just because they're able to offer those 6% rates. Then finally, this is the chart of the mortgage spreads I talked about in the intro that I talk about a lot every week because it's super important. Not enough people talk about it, but when I say the spreads, I'm just talking about the difference between the 10-year treasury rate and mortgage rates. This is a number set by the banks, and if there's economic uncertainty, just like the last 2 years when we were way up here, last year specifically, we had terrible spreads. In economic uncertainty, these numbers get worse. Economic certainty, these numbers get better. As you can see this year, things are getting more and more certain, and the spreads are getting better. So I said it in the intro, but if spreads were as bad today as they were up here, based on where the 10-year treasury is today, mortgage rates would literally be at 7.25% instead of the 6.64% they're at. So this is huge news, and it would not be unreasonable to think that the spreads are going to continue improving. And historically speaking, they should be closer to like 1.8%, so way down here. They're currently at 2.28%. So again, even if the Fed doesn't cut rates at all, as long as the spreads keep improving, mortgage rates are still going to come down, even if the 10-year doesn't drop and if the Fed doesn't cut rates. So this is very important, and this is very good news. We are clearly trending down on the spreads. Okay, before we move on to the local market data, if you're considering buying a home in Texas in 2024, 2 things. 1, if you don't want to go broke buying a house, I've made a home finance course for you where we'll discover your actual personal spending habits straight from your bank account and figure out exactly how much money you personally can spend on a housing payment without going broke. Then we'll take a look at how much house that number could actually afford you today in today's market with today's rates. It takes into account everything all the way to how much of a maintenance budget should you have based on the age of your house? How much more could you expect to pay on utilities as you move into a bigger or maybe older house? And everything all the way down to your income tax bracket. It's a no-brainer for anyone who wants to have peace of mind about their home purchase. Then number 2, if you're still a ways out but you just want to be fully educated on the home buying process before you step into the market, I've made 2 courses. One is for pre-owned homes, one is for new construction homes. They're totally different contracts, different deposits, different timelines. So choose the one that best suits you. Links to all of those courses are down in the description below. All right, now let's move on to the local market data, starting with the MLS data of Dallas County. In the last week, we had 587 new listings. That's 71 less than last week. 248 closings. That's 87 less than last week. Of the homes that closed, 38 were immediate sales, meaning they contracted within the first week. That's 29 less than last week. 304 went under contract. That's 19 more than last week. In total, there are 2,139 homes either under contract or in pending status. That's 105 more than last week. So you can see there were quite a few less listings and quite a few more contracts. Now, closings were down, but you have to remember that's from data more than 30 days ago. Wherever mortgage rates were then is what was impacting that number. So even with rates jumping last week, we still saw an increase in the number of people contracting. Now moving on to Collin County, we had 432 listings. That's 2 more than last week. 222 closings. That's 70 less than last week. Again, those mortgage rates from 30 plus days ago. We had 27 immediate sales, which is 22 less than last week, so nearly half of the immediate sales. We had 183 go under contract, which is the exact same as last week. In total, there are 1,841 homes either under contract or pending. That's 90 more than last week. Okay, moving on to the Market Action Index, starting with Dallas County. And if you've never seen this, it just takes all of this data into account, puts it into one easy to read graphic with a number. Anything at 30 or below is a buyer's market. Above a 30, we're asking how much of a seller's market are we in? You can see here, we are still at a slight seller's advantage. We've been there for most of the year. And all we're looking for here is, are things looking weird or are things looking normal? What should be happening this time of year is everything should just be cooling off all the way through the end of the year. So what's not normal is this week we actually had a slight heating in the Market Action Index from 37.6 up to 37.78. Not a huge deal. Doesn't mean the trend has reversed. We don't look at 1 week data. We wait to see the trend. But just know last week was hotter than this week. Not surprising because that's reflecting the data from when mortgage rates were a little lower. Now that they've jumped back up, it's likely that this number will come down again next week. But median list price has been holding pretty steady around that 420,000. Median price of new listings as well, you can see it's just in a range up and down here around 400. Median price of new listings as well, you can see it's just here in a range, 380 to 402, 390, 400, 390. So 390 to 400, that's the range we're in here. And that's not quite normal. We really should be trending down, but again, that's not a big deal either. Rates did drop. Now that rates have gone back up, I would expect we're going to continue trending down through the rest of the year, just like normal. Average days on market actually saw a little drop for the first time in a while. Just 1 day, no big deal there. Median days remains at 56. Number of homes having price decreases has been flat, really since August, pretty flat. Inventory, what happened with inventory? Yep, went up slightly. That's normal. And again, Market Action Index, just a tiny increase this week. So overall, things are looking very normal. Let's look at Collin County. Collin County is looking pretty normal. Well, they actually had a slight heating as well. But remember, that's from that week that mortgage rates were really low. So I do expect this will continue down next week. But their median list price is finally pretty much back to where it was back on August 30th. It started to climb, but now it's come right back down. We might be in a range. This might actually go up and keep going sideways, but what should happen is it should continue down. And then of course, median price of new listings, if you remember that 1 week, things went crazy from 500 all the way to 615 median price of new listings. Obviously, that's why we don't trust 1 week data. If you just look at the trend, it came right back down. We're at 515, so just slightly above where we were there. And again, normal would be this should be trending below that number, but we're not there yet, but we're clearly trending that way. Average days on market increased by 1. Their median days finally jumped up to 63 though. So you should know if you're listing in Collin County, you just have to be more patient. It's not that you have to be cutting your price. You need to just know the median days right now is 63. You're going to have to be patient. You don't expect to sell in the first week. Number of homes having price decreases is actually coming down in Collin County for the last couple of weeks. Inventory actually dropped as well. And again, their Market Action Index, probably just a 1 week blip of going up. But overall, things are looking pretty normal. Collin County is at 36, slight seller's advantage. Then looking at the pending sales of Dallas County, we are coming down this week, but as you can see, nowhere near as fast as we did the last 2 years, and still significantly more pending homes than the last 2 years. That's the black line here on top. Collin County, of course, way more pending sales. That's just because Collin County is the number 2 fastest growing county in the country. So this black line, what you're seeing, that is that growth. Way more homes pending than the last 2 years. And same as Dallas, they're declining, but nowhere near as rapidly as they did the last 2 years. Okay, now moving on to our top 10 ranked hottest and coolest cities and zip codes. Starting with the hottest cities. Carrollton, Texas remains the hottest city. It has been there for many months. Grand Prairie, though, heats up 2 spots this week. I think this is probably the highest Grand Prairie's ever been on the list since I've started. Lancaster heats up 3. That's definitely the highest Lancaster's been. Then Saxe cools off 1. Ferris cools off 3. Louisville heats up 1. Coppell jumps onto the list all the way at number 7. So you see a big jump here. I mean, it doesn't look big, but when everything else is trending slowly down, even this small blip up will jump you all the way up to number 7. Then Irving cools off 3 spots. Garland cools off 1 spot. And Richardson jumps on at number 10, replacing Plano this week. So Duncanville, which was number 9 last week, fell off, and then Plano, which was number 10, fell off, and then Coppell and Richardson came on. Then we like to zoom into the hottest zip codes. The absolute hottest is Hutchins, Texas, 75141, followed by Allen, 75013, Dallas, 75244, Carrollton, 75007, Carrollton, 75010, Irving, 75061, Garland 75041, Dallas 75234, Dallas 75287, and Grand Prairie 75052. Okay, now moving on to the coolest cities. The absolute coolest remains Blue Ridge, which is a 23.01, very cool market. Remember, a 30 or below is a buyer's market. So all the way up to Anna, these are all buyer's markets. Then Leonard, Sunnyvale, and Van Alstyne all remain in 2, 3, and 4. Whitewright cools off 3 this week. Anna heats up 1. Salina remains. Prosper heats up 2. And then Rockwall and Lavon remain the 2 hottest cities on the coolest cities list. Then looking at specific zip codes, and actually all of these zip codes are officially buyer's markets because they're below a 30. The absolute coolest, Blue Ridge 75424, Leonard 75452, Sunnyvale 75182, Dallas 75204, Van Alstyne 75495, Whitewright 75491, Rockwall 75032, Dallas 75212, Dallas 75220, and Anna 75409. Remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.